You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. I'm your host, Brian Overby, Ally Invest Senior Options Analyst and author of The Options Playbook. All right, so we're at the tail end of earnings, and last week we actually looked at a stock that was outside of earnings. And we've always, if you've listened to Options Playbook Radio before, you know around earnings, one of my favorite trades to look at are butterflies overall. And that has a lot to do with implied volatility being raised most of the time around earnings. And when implied volatilities are higher, usually butterflies are cheaper overall. So it's always an interesting time for that to happen. And when you're correct on the butterfly, what you want, if you're correct on your forecast and the stock starts going towards your middle strike of the butterfly, you want implied volatilities to come down. So when you have expensive stocks that are announcing earnings, in particular, we talked a lot about Amazon, usually announces on a Thursday, very expensive, fairly volatile overall. But if they announce on a Thursday, by that Friday expiration in the weekly option contracts, all that premium has to go away because they're expiring. So it's always an interesting scenario, I think, in Amazon because they routinely seem to announce on Thursdays after the close. So last week, we went back and said, okay, well, is it possible to do a butterfly on a stock that doesn't announce earnings? And I agree with that. It is. So sometimes when you get volatile stocks, you'd like to have some volatility and some predictability, which is a little bit of an oxymoron, right? And the one thing that you don't get with earnings is you don't get a lot of predictability about what's going to happen. You can usually go far enough out of the money to kind of protect yourself against that. But overall, we looked at Coinbase. Coinbase has been in the news recently. They've already announced earnings, but volatility on Coinbase is still up around the 70% level. So we're like, we don't need earnings to get the juice to make the butterfly cheaper overall. So we went out last week and did a skip strike butterfly in Coinbase. The stock was at around 330 at that point in time. Stock has been volatile. We went far out of the money, all the way up. Our short strike on our skip strike butterfly was 400. So 70 points out of the money. It was possible for Coinbase to make that, but that would have been close to an all-time high in the underlying stock. And it trades alongside with the crypto, even though they have earnings, right? They make money if crypto goes down just as much as if crypto goes up on all the stocks that they trade overall. So just an interesting play we went out and we did the trade. The stock has been up 25, down 30, up 40 since that last week. So it's definitely had some volatility in it. It never came close to the 400 strike, but we did it for a net credit of 23 cents to the account. And right now, we are taping Options Playbook Radio live. It is Friday. The markets are open November 19th. And Coinbase is at 331.47. So with all that volatility, it's only up $1 since we put on the trade. But all the options are going out worthless at this point in time. They're the November 19th expiration. There's really no premium left in it. So you made your 23 cents on that, or $23 minus commissions for every 1x2x1 trade. So, moral to the story, stock like Coinbase, you don't need earnings. And if you wanted to, you could do a rinse and repeat. Now, you don't have to be bullish on it. You can be bearish. You could do a skip strike on the bear side. A lot of times using puts going further out of the money is a little bit harder to get done for a net credit than on the call side, just because of normal volatility skew. I don't want to get too advanced here, but it doesn't mean that you can't look at them and decide if this would be a trade that you would want to do in over the next couple of months. Go out a week or two in time. This would be the underlying stock that I would consider. Now, with that said, that's not meant to be a recommendation overall, because when the whole goal of Options Playbook Radio is that we have 40 different strategies, and we're not going to just come in and just talk about buying call options, selling covered calls, selling puts. We're trying to apply the strategy to the underlying stock. It basically is based off of the theme that there is not a golden book of answers as to what the best strategy in the options marketplace is. There's a lot of strategies. And depending on if it's a high price stock, lower price stock, if it is during earnings or not during earnings, that really affects the strategy that you want to choose. Okay, so to go along with that theme, I'm going to go back to a stock that's actually announcing earnings, and I want to talk a little bit about a standard butterfly and why I would rather do a standard butterfly in this underlying stock around earnings as opposed to doing a skip strike. So the stock is BBY, which is Best Buy. They're going to be announcing earnings on November 23rd, and it's going to be before the market. Okay, so as always, we always start by looking at what the long straddle is for the earnings announcement, right? So the November 26th expiration would be the nearest to the earnings, and that contains the earnings. And if we look at the long straddle, which is obviously next week, we see that it's trading for about $9.30. All right, so we'll round that up to about $10. We'll say it's not an exact science, but that is the line in the sand. Basically, the people that want to buy the long straddle think it's going to move more than that, right? And the people that are selling the long straddle think it's going to move less than that. You can say that we call it the expected move, but it's really a form of over-under. And so the marketplace is basically trying to tell you, what the line in the sand is for the move after earnings. Now, no regard to direction whatsoever. We're going to stay on the call side with this. The market's been a little bit bullish overall, and so it makes it easy to just pick bullish trades, but you don't always have, you go whatever direction you'd like to go with it. And once again, this is meant to just be a paper trade. We're trying to learn here. So with that said, here we go. All right, the markets are open. We're rocking and rolling. Right now, Best Buy is at 135.80. We're going to do the November 26th expiration. We're going to go just under 10 points out of the money on our butterfly, and we're going to do a 5-point wide butterfly. That will give us approximately a 10-point wide landing space. All right, so we'll be buying the November 26th expiration 145 call, selling 2 of that same expiration 150 calls, and then buying 1 of that expiration 160 calls. We're going to do this for a net debit of 11 cents to the account. Now, if you wanted to do this as a skip strike, it's not a bad alternative, but I don't mind paying that 11-cent net debit for the potential to make $5 on this trade. But if we did skip the 160 strike, in this scenario, you could buy the 165 and you could get it done for even. You could save yourself 10 cents on that trade and try to fill this trade at approximately 0 cents to the account overall. And you're going to add $5 of risk. You're going to have a $5 margin requirement on that trade. But if you did it that way, it's a potential. So you're going to risk an extra $5 to try to save that 11 cent net debit that you're paying for the account. So those are the ways that I would approach it. On the Coinbase trade, I am a little less nervous about it. Now, news can hit in the crypto marketplace at any point in time, but we're not doing it around an earnings. So we do, once again, you're adding risk on the trade, and we talked about that a lot on the Coinbase trade last week. But with that said, you're adding that risk, but you don't have the uncertainty of the earnings as much either. So give and take. There's always alternatives. This time around, I'd rather just do a standard butterfly. Okay, so enough with that. I feel like I'm beating a dead horse at this point in time. So let's do one quick review. Best Buy announcing earnings November 23rd before the market. The expected move in the stock is $9.30. The stock is trading at $135.80 right now, live. We're going to buy the November 26th expiration, 145 strike call, sell 2 of the 150 strike calls, buy 1 of the 160 strike calls, and we're going to do this for a net debit of 11 cents to the account. Your maximum risk would be $11 plus commission for every 1 by 2 by 1 that you did, and you would hope that the underlying stock finishes somewhere between 145 and 160. That's your landing range for the underlying stock after earnings. Now, don't forget, you could always wait on this trade too. Do it on the day of earnings. But we always tape Options Playbook Radio on a specific day. We don't always get to choose that day. So with that said, that's going to be it for this edition of Options Playbook Radio. If you have a topic you'd like us to discuss on the show or a question you'd like us to answer in the program, please send them directly to me at theoptionsguy@invest.ally.com. And big news, we're going to have Options for Rookies on November 30th. It'll be a 3-part program, hour-long shows, all on the Ally YouTube channel. If you'd like to sign up for that, go to ally.com/options for rookies. Options with an S, rookies with an IES. And to sign up for the event. It's going to be a great event. Please share with your friends, family, anybody that's a basic option trader and wants to dip their toe into the options marketplace. This is one of the first 3-day, very basic courses that I have done in a very long time. So I'm very excited about it. We already have a lot of people lined up, but it's unlimited on the YouTube platform. So please let people know about it. And thanks for listening. We'll be back same time, same place next week. Until then, may all the options you bought finish in the money and all the ones you sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available on the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.